Well, Kenya's house prices were almost static in the first quarter of 2013, with only standalone houses recording a slight increase. Joining us now live from Nairobi to unpack the numbers further is Nathan Luesby. He's the property consultant at Hasconsult Real Estate. Thanks so much, Nathan, for joining us this afternoon. As I've said, we've had house prices almost static in the first quarter of this year. Take us through the real estate market right now and the kind of trends that have stood out as highlights for you from the first quarter report.
Okay, thank you. Yes. Well, the market has been very flat, but it's mostly attributable to the uncertainty created by the election. During a period in the run-up to the election, house buyers were holding off. There weren't many transactions being completed, so house prices remained relatively static and flat. This is something that we anticipated and is usual with the property cycle in Kenya, and it's something we've seen over the last 12 years that we've been recording property prices. The anticipation is now, with the election out of the way and the uncertainty removed, that it actually could be a very vibrant period in the property market. And what we've seen is our activity indicators showed that the number of viewings and number of inquiries for properties increased dramatically in the last month of March.
What is that activity currently doing to the prices being asked for, Nathan? Because while you highlight the fact that we're seeing increased activity, bear in mind that, as I highlighted earlier, only standalone houses saw some rise, up 1.2% across the 3 months. We've had townhouses recording some falls in prices, and then apartments also recording a 0.2% decline.
Oh yes, as I said, the prices reflect the asking prices that have been offered for in the first quarter of this year. And as I said, because of the election, there wasn't that much buying or activity in the first quarter. What I was trying to highlight with the activity is has returned sharply now that the election has passed. And what we would expect to see is, as we move into quarter 2 and beyond for the rest of the year, it could be quite a vibrant time for the market. The low or static prices that we saw in quarter 1 were very much anticipated. We didn't expect much activity because the buyers were reluctant to part with their money while there was the uncertainty during the election.
Given this return of vibrancy to the market, Nathan, though, my question is, with the increased activity you're seeing, what's your outlook as far as these prices are concerned moving forward? To what extent should we be anticipating an uptick?
Okay. Historically, the year after an election in Kenya has seen very strong price increases to the property market. 2008, despite the post-election violence, was one of the best years in the last 12. So my anticipation is that we're actually going to see quite strong increases to property prices in the coming 12 months. One of the things, though, that we highlighted in this report is we need the banks, the financiers, to come to market. What we've seen in the last year is that the Central Bank of Kenya has been cutting their rates now down to a CBR rate of 9.5%, but the mortgage rates remain stubbornly high. If you look at our mortgage table and lending report, the fact is the mortgage lenders have been using the election uncertainty as a reason not to reduce rates. To really invigorate the market and to get the buyers coming in, we need to see the mortgage lenders also bringing their rates down in line with the Central Bank of Kenya rates.
What sense do you get from those mortgage lenders, specifically the likes of a Housing Finance, that they're going to be coming to the party sooner rather than later?
The sense is that they want to come to the market. There are a few difficulties for them about sourcing funding that they can lend at a competitive rate. And there are a few fundamental issues in the market, but I think they will come to market. I mean, as the market starts to pick up, as the inquiries start to come through, as the mortgage buyers come through, we expect to see a more competitive environment, so we hope that the banks will start to follow suit and bring their rates down. What we've been targeting and what we really want to see is a return to single-digit mortgage rates, because we think that will really bring vibrancy, especially to the lower part of the market, which desperately requires mortgage financing.
So that in the buyer's market specifically, Nathan, let's take a look at some of the trends that have evolved in the rental space specifically, and the kind of price action we've seen on that front in comparison.
Okay, the rental market in the last year has seen some very extreme price rises. Now, part of that is because of the uncertainty in the buying market. You know, buyers holding off making a buying decision, so being forced into the rental market. There's also been some structural changes or implementations of taxation on landlords, which has seen some landlords increasing their rents in accordance with that. So it's been quite a period of quite high rental inflation, but during a period of static house prices we'd kind of anticipate that. Now I think going forward we haven't quite seen the end of the rental increases, because I still think that landlords are chasing higher returns. Yields in Kenya of late have been quite low. I mean, you're talking about between 5 to 7% across most property types. So I think landlords will continue to push for higher rents, but as the buyers return and the market starts to move more to a buyer's market, we should see stabilisation in that area as well.
When it comes to housing and affordable home ownership in Kenya, I mean, to what extent is that still looking like a pipe dream?
It is a pipe dream for many, unfortunately. I mean, the problem in Kenya is we have in Nairobi, we have some of the most expensive properties in the world, very high rents in comparison to the average earnings, and incredibly high interest rates. So, you know, it's not an easy market to for lower income and middle income people to move on to the property ladder. What we have to see is quite fundamental changes. One, in the cost of finance, you know, make it more affordable for people to borrow money. We need to make properties that are being developed more affordable. One of the things that we've mentioned in the report, or the mortgage company through Carol Kariuki has mentioned in the report, is that she's looking for government interventions, you know, helping developers out with infrastructure, which is accounting for 20 to 30% of the cost of some of the developments that come into market at the moment. We're also hopeful, though, that devolution and the opening up of county governments could lead to a diversification of the property market away from Nairobi, where a lot of the business is centralised at the moment, into the counties, where land prices are lower, and that could lead to more development in these areas. I mean, there's a lot of excitement in Kenya as far as development is concerned because of the oil discoveries, the new port at Lamu. I mean, these things are all opening up different areas which haven't been exploited in the past.